Good morning, it's Jonathan Barr with the morning debrief. It's the 29th of April, this is the last trading day we've got, and it's 7:59. Okay, interesting night overseas. The Dow was up, FTSE was up, equities were up, earnings were up, GDP was down. Yeah, it sort of seems a little bit interesting there. And Bernanke's comments continue to resonate through the market that interest rates will be kept low because he's concerned, obviously, that economic growth is not as strong as what people expected. And will that not be the case, considering that they've been stimulating the economy for the past 4 months? He's also continuing to keep the stimulus going, and that raises questions that I have, that the returns and earnings that we're getting out of the States are as a consequence of the stimulus. Why the S&P can get up to, I think it's close to a 3-year high on this stimulus only suggests that it's going to come from a level from which it can fall. And I think that, to me, is one of the big ticket items at the moment. You know, the economy is not moving as well as what people expect. In the US, the Fed have already said that, yet the people continue to want to drive prices higher. We've still got inflationary expectations. You know, all these things are starting to come to a head, and the market continues to factor in these good numbers. I think it's very hollow, basically. And it could be quite interesting to see some of these asset prices readjust over the coming months when it's clear that the US economy is not as strong as what's happened. Remember, this is the second stimulus, and what's left next in terms of packages to stimulate or re-stimulate the economy. GDP, as we've said, is not that good. So it's going to be quite an interesting show. Let's keep close to it, but before we do that, let's get into a little bit of a wrap as to you know, what happened last night. And it really is getting to that stage where, you know, I'm sort of knocking my head against a wall. You know, when you talk to people and the markets continue to rise in the States, S&P close to a 3-year high, you know, on earnings and M&A. I mean, that's great, but at the end of the day, when you look at it, why are they achieving these earnings? It's because the Fed continues to buy bonds and pump money into the system. And why do commodity prices go up? Because there's more money in the system, the dollar remains weak. Because we're priced in commodities in US dollars, they go up. And that in itself cuts off its own. So I think it's going to be an interesting period, probably just a little bit shaky. So let's see how it unfolds. But anyway, the Dow was up 72 points, 12,763. The S&P was up 4.8. The Nasdaq was up 2.65. And in Europe, our top 50 was up 27. The FTSE was up 1. I thought I would get a little bit of lift there, the wedding. But anyway, let's see what happens. A bit cynical there. The CAC was up 37. The DAX was up 70. Local market closed up just a little bit in the futures. Where are you? Might have missed it. Sorry about that. S&P was up 9 at 4,882. So I guess it continues we continue to look at it, and we're continuing to see, I guess, commodities have an interesting play. And the commodities sector across the board was exceptionally volatile last night. Give you an example, gold continued to rally to record highs, silver getting close to US 50. Softs plummeted in the US down to limits in Chicago on the back of a report basically saying that demand is eased. Now, it seems quite interesting, particularly when you look at the demand is easing for corn, yet at the current moment, we're only 9% planted in terms of this year's crop for corn. At the same time last year, we were up at 46%, we're only 9% now. So there's quite a bit of interest in play there at the moment. We're still supportive of those grain prices, but I think this provides us with a good opportunity once we see the dust settles to actually get along for more of a call towards third quarter, end of third quarter. Okay, let's just have a look at a few of those markets independently. Righty-ho, crude, there's gold at the moment, down 1, 15.35. Just look at that rise, that's all I can say. I can't say too much. When do you buy it? When do you sell it? It continues to rally. It's interesting to see that even with this rally in the gold market here, that our local market hasn't really had that opportunity to take full advantage of it. Let's see how it unfolds. On the back of that, the Aussies continued to rally. It's 109.26, and I think we're getting close to a high, but you can't date that. Silver, a little bit easier to follow. Silver there at 48.35. Expectations from my mind is for it to have a look at it, but I think we'll probably see some profit taking coming pretty soon there. I still like that gold-silver ratio, and that's that's actually paid very good dividends for us. That's buying gold and actually selling silver, as you can see. Silver in itself has been very stable, right? Yet gold hasn't. So we're certainly at those levels where that gold sort of, that gold-silver ratio certainly is the right way to go. Anyway, let's have a look at that dollar index. That's obviously a very big key for us. And as you can see, there it goes. It's dropping to major levels. It's past that low there. So you've got to go back a fair way. Here it is, back down to 2008. And there's that low, March 2008, to see a low where there is potential. I think it's more important, this low here, the response. Okay, so I'd expect to see some response triggered once the market trades down to that level. Okay, so just be close to it. At the moment, momentum's exceptionally weak for that dollar, but it will turn around. Okay, let's look at crude, 11, 12, or 112.86. Haven't really broken to new highs, but gee, she looks strong. We might get a bit of a blowout through the top side and then a little bit of a correction later tonight. Let's see how that worries, because this worries me. Momentum is slowing down for crude, and as we've mentioned before, we've got a small short. Just with copper as well. If we take out that low there, keep an eye on that, it's 421, then I think we do start to trade lower. So we've got a short there as well. Now, the other thing to note is I'll try and grab it. Natural gas, everyone knows we've got this lazy position in there, and we've all expected something to occur from it. And look at this chart. I'll just pull it up. And where are you, natty gas? Just the spot continuous will do us. There we go. 4 feet, look at that. I mean, we're getting close again to another breakout. I'm glad we're long. And the boys just put out a new warrant on that because they're expecting that to break through. But as we've mentioned before quite a few times, natural gas is something that we're looking at and continue to look at. And expectations are for basically for natty gas to continue to trade higher. Why can't I get that trend line? Anyway, let's have a look at that. There you go. That's the chart, and in my mind, that represents a good buy. Still does. Anyway, got a bit of a problem there, but anyway, that's that chart breaking out to the top side slowly. If you are long, that's where your stop has to go below that level. But a breakout trade, it does come close to representing itself. Okay, so that's looking at those. We've looked at some of them. Grain markets, corn, very disappointing move last night, and that fell down limit. Very interesting, and don't get too upset by it. The actual response to it was that the corn fell on the back of a government report showing demand is easing. Now take that in context. In the other side, where it says that plantings for corn this year are at 9%, whereas last year they were at 46%. So that indicates the window of opportunity for planting corn is closing. And if they can't do that, you've got a supply issue. So I think this weakness that we're seeing, but it's certainly there. As a result of that, we saw weakness in the wheat and the market. But I'm a little bit cynical on that report because I think it's just a matter of longs getting nervous. You can't ignore it. We take it out, that 730, then the chances are it comes back into this area. Momentum index still support it, so it just might be a little bit of a blip. Now, in terms of economic news last night, most important, GDP in the States, not really that good. Quarter one GDP, 1.8%, that's down. Look, I don't know. You've got to say, why does the Fed keep on saying that economic growth is not as strong as we expect it to be, yet the S&P trades higher? I don't know. I'm sort of stuck there a little bit. But anyway, let's see how that unfolds. GDP was down a little bit, unexpected. That was a big number tonight. Most important data is out of Eurozone consumer confidence and climate data, and they've got industrial and services, as you can see there. In the States, personal spending, employment cost index, personal income, all pretty important. But I think the market's still really digesting what's happening there in terms of why the equity markets are moving higher, why Bernanke's turning around saying, hey, it's not going that strong, and why some commodities are actually continuing to trade high. I do think it's just a US dollar play because the US dollar is exceptionally weak. And as I said, we're getting close to trigger points that will trigger some response on the weakness of that dollar. So let's see what happens. But I think we're at turning points, and we've just got to stay close to a lot of these markets. But that's about it from me today. I hope everyone has a great day, great weekend, and we'll certainly talk to you next week. And bye for now.